I would say in general that if we go, let's say to 12 to 13, I think the bounce would then take us back to that trend line that we just broke. So if we look at the chart again here, what we can see is that basically this line now becomes a major resistance. So when you break support, it becomes resistance. And especially a line like this that we were bobbing up against for such a long time, it breaks to the downside. So let's say we go to 12 to 13, we go down in this range here. You would expect a snapback back to that line, which is around 18.5. So I think, in all fairness, that's, what is that? Almost a 50% move off 12,000. So it's worth trading. Like I'll be swing trading it, but I probably won't be, jumping in heavily on the long side for longer than a swing trade at that point.
Hello, welcome to our channel. Today's video, President and Chief Market Strategist at InTheMoneyStocks.com and verify crypto investing updates about the FTX collapse and its immediate impact on the price of Bitcoin. Gareth also reveals whether or not his Bitcoin thesis still stands, or not, along with the major factors stopping Bitcoin's adoption from major institutions. Make sure to stick around to the end of this video where Gareth Soloway reveals whether or not Bitcoin will hold steady at 16K level or go lower. If you liked the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Yeah, so for the most part, my thesis is pretty much intact. I think there's a huge amount of support around 12 to 13,000, but I do ultimately think we go down, we break 10,000 just for a short amount of time, maybe touching the 9,000 level. One of the interesting research pieces that I did was comparing FTX to the Lehman Brothers collapse in 2008. And what's fascinating about that, and you can see the mirroring, right? You had this major exchange, which in the crypto world is kind of like a big bank. And then you had Lehman Brothers, which was a big bank in '08. And what's interesting is that it took about 5 to 6 months following Lehman for the markets to actually bottom out. So what that does is it gives us a potential point of where to look for a bottom. And the question is, how much lower does Bitcoin go? And from the Lehman Brothers collapse, when it filed for bankruptcy in '08, it basically caused the S&P to drop about 40 to 50%. Well, if we take 40 to 50% away from the current price, we're down but right around that $9,000 level. So for me, that's kind of isolating. As we get closer, I think that's what we're looking for in terms of a bottom on Bitcoin. So again, I guess there's a positive and a negative, right? The negative is we still have lower to go. The positive is we're actually starting to get close to what I would call a near bottom. And I think that's exciting. If you're someone like me that loves Bitcoin in the future, it's exciting to be like, okay, it's almost done. Yeah, a little bit more pain and it's going to be rough. There's going to be a lot of people when we get down to 10 or 12 that are going to be panicking, but be calm about it. Make sure that the thesis for Bitcoin is still intact, which to me it is, and therefore you think logically and you're a buyer at those levels.
Over the past 2 weeks, the cryptocurrency industry has been rocked by the disastrous collapse of crypto heavyweights FTX and Alameda Research. As soon as the rumor spread that the two had muddled the lines between customer deposits and their investments, a chain reaction ensued, sending shockwaves through the business. After the implosion, Bitcoin and other cryptocurrencies went into a tailspin, making November 2022 one of the worst months in crypto history. For Bitcoin and other cryptocurrencies, the fourth quarter of 2021 marked the beginning of a brutal decline that has persisted to this day. Bitcoin's price has dropped about 75% from its all-time high, which was just north of 69,000. Total value of the cryptocurrency market reached $3 trillion in approximately the same time last November, but has since dropped by nearly $2.2 billion. Russia's invasion of Ukraine and government's large fiscal stimulus during the COVID-19 lockdowns contributed to rising inflation around the world in 22, making this year's difficult for investors everywhere. The government has boosted interest rates in an effort to bring inflation down to manageable levels, but this has had a negative effect on financial markets.
And so we don't even know all the damage yet. It's just filtering out like you mentioned. And I think you have to keep in mind that a lot of these firms have crypto on their balance sheet. And if they're forced into bankruptcy, they're going to be forced to sell that crypto, and it's going to continue to put pressure. In addition, I think the biggest negative for crypto right now is that after FTX kind of blew up, there's really no big money that's going to feel comfortable going into any cryptocurrencies at this point until we have regulation, until we have transparency. You saw it with Kevin O'Leary with his comments. He was basically like, I'm headed straight for Washington to get regulation going because I will not go within a 10-foot pole of essentially another crypto at this basis based on the fact that he lost so much money. And so, again, we have to kind of keep in mind that that's going to be a headwind. Then you throw in the fact that I don't think the stock market has bottomed as well. And if we see more downside in risk assets, then we could also see Bitcoin under pressure. So all these things will push it down. But the question is, at what point does it bottom? And I think the biggest thing is, like, even with me saying 9,000-ish, I'm not waiting for 9,000 to start accumulating. In fact, I've already accumulated a small amount because if we don't hit 9,000, I don't want to be left holding zero when we start our way back up. So what I'm doing is basically I'm spacing out my buys. Every 3,000 down, I'm just buying the equivalent of like a 1/6 position equaling a 6/6. And essentially that gives me that ability to dollar cost average in all the way down. Even if it goes to like 5,000, I'll still dollar cost average in down there.
Yeah, that absolutely makes sense. Could you share the charts maybe for Bitcoin, Ethereum, and XRP and what you're seeing as far as the short term?
Yeah, absolutely. Absolutely.
Some industry participants have been left particularly vulnerable by the general downward trend in cryptocurrency prices since the beginning of the year. The collapse of Terra Luna in May had widespread repercussions throughout the cryptocurrency industry, with about $60 billion disappearing from the cryptocurrency exchange within a few days. Many businesses were impacted, but the biggest names to declare bankruptcy after the tragedy were Celsius, Voyager, and Three Arrow Capitals. By October, the cryptocurrency markets had seemingly shaken off the lingering effects of the Terra collapse and were trading upwards. On November 2nd, 2022, however, CoinDesk broke the relative calm by reporting that industry heavyweights FTX and Alameda Research had apparently placed themselves in a precarious position. As a result of these developments, widespread panic spread throughout the cryptocurrency industry, and the value of Bitcoin plummeted as investors sold their holdings in a frenzy to preserve what little they had.
So here we have the chart of Bitcoin, right? And what we can see here is that Bitcoin is holding steady event, which means that the Fed is communicating with the ECB, Bank of England, Bank of Japan, and the amount of breakage that would occur if we did see this max pain dollar would be exponentially bad. So for me, I'm kind of in the camp that I actually am a little bit more bearish on the dollar, and it makes me more bullish on gold in the near term. Bitcoin, again, being a risk asset, I'm still a little iffy on, because I think if the stock market still has a lot of downside, like I think it does, then I still think Bitcoin does get hit just based on that, risk divergence. And we can see right here, it broke to the downside, and you can see this, right?
Mm-hmm.
All right, so basically this was a major support line. We got a pivot from June, it connected through here and right here, and we finally broke that. And what we're actually forming, this is called a flag pattern, a bear flag to be exact. And I'll draw it in so those of you that can kind of see. So here's your flagpole, which is a vertical drop. And then essentially you have a move here, and you connect these highs, and you can see how it's like an upside down flag pole, right, with a flag. And so that's known as a bearish pattern, and that usually probabilities dictate that it will break lower. And breaking lower is going to take us down to this pivot from 2019 and then this one from 2020. And that's going to be major support. That's right around that 13,000 area, at which point if we should get a bounce. But ultimately, I would expect a final flush down. And then we have this long-term trend line, which coordinates with that Lehman Brothers kind of correlation, which is right around $8,000 to $9,000. And that's kind of where I'm looking for Bitcoin to bottom. And what's fascinating about this is if we go down to that $8,000, $9,000 level, it's doing is it's taking us down to the long-term uptrend of Bitcoin, right? From the long-term low here from 2017 before the first big bull market there. And then this one little in here, there's their COVID low. And basically all you're doing is connecting those lines, those points, and you get that target price. So it's kind of cool how that works, how you have a thesis like, okay, what happened with the Lehman Brothers collapse? All right, let's look at the correlations there. And then you also find a trend line that coordinates as well. It's pretty powerful stuff.
Sam Bankman-Fried, or SBF for short, is a crypto industry tycoon who founded FTX and Alameda Research, two major exchanges and quantitative trading firms. According to the CoinDesk investigation, despite appearances to the contrary, the financial records of Alameda Research and FTX had grown interwoven. Alameda Research's portfolio was heavily weighted towards FTX token, represented by ticker code FTT. Several days after the news broke, Binance, an FTX investor and competitor, said it would liquidate its entire $58 million investment in FTT. The revelation unsurprisingly caused a precipitous drop in the value of the FTT token. There was an instant bank run on the FTX market as the price dropped, with little prior warning. The FTX network abruptly ceased processing withdrawals after only $4.5 billion in crypto assets had been taken. The crypto sector as a whole will feel the effects of SBF's downfall. Both FTX and Alameda Research were considered to be at the forefront of their respective fields and had significant investments and reliabilities with numerous market participants. There's already been reports of other businesses impacted by the FTX collapse, stepping forward and suspending user withdrawals until they assess the level of damage. There's been some widespread panic and hysteria in addition to the direct effects of FTX business transactions. Some cryptocurrency investors have completely lost faith in centralized platforms and exchanges and are desperately trying to get their money out of their accounts. Over $3.7 billion worth of Bitcoin, along with billions of dollars in other currencies, have been taken off exchanges, demonstrating the scale of the loss of faith.
And for Ethereum, are you seeing a similar pattern since all coins, for the most part, follow Bitcoin?
Yeah, so what we see here is there was this wedge pattern here, and we can connect the highs going all the way back to the Ethereum all-time high. Here's this pivot point here and this pivot point here, and then you could connect the lows, which mimic kind of the Bitcoin channel that it was creating, and it creates this bigger wedge pattern. And what we can see here is that Ethereum broke to the downside. It retraced, tested that line, and has been fading since. So I would kind of be in that same camp of saying, okay, unless we somehow recapture this area and get back above it, you have to favor the downside on Ethereum. So we're looking at potentially retesting that 900-ish area, which was the low on Ethereum. If Bitcoin really goes to 9,000 or even 10,000, you got to imagine Ethereum's down at 600, if not even a little bit lower. But same kind of feeling with Bitcoin is that, once you get down sub 1,000, I think you're playing with the house's money as you accumulate. Obviously dollar cost average in, but if you ask me which are the safe cryptos to invest in for the longer term, there's only two of them, Ethereum and Bitcoin. Now, other people will tell you, oh, it's Ripple or this or that. But to be honest, I don't know if I'm pretty confident on Bitcoin and Ethereum. I'm not confident on anything else because we don't know the regulation yet. We don't know the rules that they're going to have to abide by, the technology, all that kind of stuff. So I would say, again, once you get to certain levels, it really makes sense to start accumulating Ethereum. I just think they're both going lower in the near term.
Now, you also have, from the macro perspective, the Fed continues to fight inflation. They continue to raise rates. It seems like this is going to continue into next year. So there's just more pain. Plus, you have these black swan events happening in the crypto market.
And that's what investors have to realize too, is that as you have the Fed continuing to tighten, now it looks like inflation is starting to kind of subside a little bit. So the Fed may not have to hike 75 basis points in December. Maybe it's 50, maybe it's 25. We'll have to see. But there's no doubt that as we go down, in the stock market, because of the Fed kind of contracting the monetary system, there's going to be more hurt in the crypto markets. And I fully expect more bankruptcies. My only hope is that FTX was the biggest, right? Let's get that one out of the way. If some smaller ones go bust, it's never a good thing, but at least it's not as earthquake-like as the FTX one. So there's no doubt that the Fed is doing this, and it's part of the reason why this bear market cycle could be just a little bit longer. You don't have the Fed printing money. I think the biggest thing that gets us out of this bear market is regulation. And who would have thunk a year ago or 2 years ago you'd ever say that regulation gets us out of a bear market in the crypto markets? But if you're going to attract big money back into crypto, which, let's be honest, big money is going to drive the price up, right? They're all buying, hundreds of billions, if not more, buying. You need that regulation. You need that transparency. And I think even with, just think about a small investor. A small investor has a hard enough time picking buying opportunities in crypto where they're going to make money, not lose. But they also have to worry about, is my exchange where my money is it going to be in business tomorrow? That shouldn't be an issue. I mean, especially in this day and age, where we have all this technology and everything, it shouldn't be an issue. And I hope they fix it, and I think they will.
So do you think regulation will drive more institutions to adopt cryptocurrencies? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video, and thank you so much for watching.